The average Wall Street analyst and money manager doesn't quite understand the business thesis for whatever reason, because they're too busy schmoozing and boozing their clients. They don't quite understand that thesis. And I think that some analysts, some managers understand Bloom Energy. But I think there's a cohort of many Wall Street analysts and fund managers that don't quite understand what Bloom Energy is all about because of the level of complexity or uniqueness in the thesis. That being said, I also want to talk about how a thesis, an underlying thesis, can propel a stock higher. So let's take a look at a longer term chart for Bloom Energy. As we can see here, this stock has had just such a huge move. The stock was trading at just $16 a share. $16 a share in May of 2025. So a little less than a year ago. Yeah. Let me just double check. Yeah. So this is 2025 here. We go back to May 2025. This stock is trading for $16, $17 a share. And now it's at $283. And when you look at the fundamentals of Bloom Energy, so we pull up Bloom Energy fundamentals here. We see the chart here on FinViz. We go back to July here. We see on the chart July of 2025. This is the start of 2026 here. It was at 90-ish a share. Go back to July. It was at 22. We go back to before that, say June, it was at 21. And on the Thinkorswim chart, we could see that we look at the Thinkorswim chart and we see that go back to May, it was trading right around $16 or $17 a share. So huge move. And we look at the fundamentals. Okay, we look at the chart. We see the chart here. And we look at the fundamentals and we see that fundamentals are pretty dang good. We take a look at the sales over the past couple years, huge growth. We take a look at the EPS, it's negative, but the company is the negative earnings are getting less and less and less, which is very positive. Take a look at the earnings growth for this year, 163%. That's fantastic. For next year, estimated at 105% growth. Next 5 years, 112%. EPS over the past 3 and 5 years, 39%, 20%. So it's very, very solid numbers across the board. And the sales year over year, 56%. That's, take a look at the quarterly numbers. We see how the quarterly numbers are rising, and you see how you get some positive earnings growth. And now we're going into the positive, finally, on earnings growth on a quarterly basis here. 0.00. So the company's finally making money. That's all great sign. You have a PEG ratio of 0.61. And you go out and look out 1 year, 5 years, you have just over 100% growth, and you have forward multiple of 69. So all that's very, very positive, very bullish. And you have, as we said, very strong chart higher. Wall Street loves that. I think a lot of growth managers love those numbers on Bloom Energy, and they were very bullish on the stock, and they bought that stock. They have super high earnings growth and super high sales growth, but they also have accelerating earnings growth and accelerating sales growth. And that's like the magic sauce. Bloom Energy is an energy stock just like many other energy stocks. However, it's a unique energy because it solves a problem that is being created by all these data centers being built that has created a huge demand imbalance. And there aren't many solutions to this problem, and Bloom Energy is a solution. It's not completely easily understood to understand this dynamic. That, yes, we have energy demands as we build out data centers, but we also don't have enough copper and we don't have enough transistors to build out the energy grid in the normal way that we would like. Fuel cells through natural gas that can be hooked up in less than 90 days. And they talk about this on their conference call. And they talk about this on podcast that you have to dig for.